Okay, this morning. I'm going to have to clean this up because the problem again is we're not having very much movement in Globex high and Globex low. Let's see if I can use these drawing tools effectively today. Okay, so 522. We're just going to have to leave Globex low as a single point. The problem is it came through this area that was just really poorly auctioned. We have a little bit of structure here, but nothing really solid. If anything, if you were going to argue, the structure is actually right here. Okay. Right. And then overnight, we've obviously come back and we've just done a backside test of this break. Okay. I still would consider this untested and probably would expect a responsive buy. The first time into Globex low, either responsive sell or responsive buy, depending on which side of the coin we open. As of now, we're at this 1885 and 3/4, right? So I would expect there's not enough structure for me here to simply say I'm going to take this right out of the gate. I'm going to have to see how it looks based on price action when we open, and I may pass. The reason why I'm saying that is I just simply would prefer a stretch down into the white zone area. You notice the white zone is smaller than normal, and what I'm going to do is raise that up to that 1880 level. So let me correct that really quick. Let's see, let's move this up. The problem is we're getting stuck on top of each other here. Okay, so the way I want to treat these areas, okay, so here's the problem below is, gosh, it was so choppy yesterday and so narrow in range that it's really screwed this area up. So the way I'm going to treat this is I'm actually going to 79, 83. I'm actually going to bump us up to 80 but I'm going to change this portion right here. I want to move the white zone. I'm going to make it very narrow, 79 to 80 essentially. Okay, and then the zone below, I'm actually going to move this back, and here's the reason why. Okay, and I'm going to move this back to 75.50. I rarely do this. Again, the compressed ranges are causing us issues with lack of rotation as well. The problem is if we get below this lip, okay, we're very poorly auctioned. So technically we could come off. So this is just like yesterday where I said we could come off and not get a full rotation down. And it's just part of being in a very, very tight market. Let me see if I can change my color. Okay, so I'm going to have the white zone moved up to 79.80. Okay, again, in this white zone, this needs to work fairly quickly. And what I mean by that, because we had some confusion the other day, if I get in this zone and it's been 15 minutes, okay, generally speaking, wherever the swing low is within 15 minutes, I'm going to put a stop 1 point behind here. Why am I doing that? Why do I move it up? Why don't I just leave it alone? There's two reasons. First of all, I have a more difficult time with a slower market. That may not affect others, but the way that I do this presentation is basically, I basically am setting the charts up or the days up the same way I set them up for you. Alan, I got you. Give me just 1 second, brother. I'm sorry, I forgot. There you go. Okay, I basically set the charts up for y'all the way I'm planning to trade them myself. Okay, so normally I like to have 2-point ranges. When we compress the volatility and we compress the ranges like we have right now, I have to make adjustments, right? So normally I'd have the zone 2 points off the low, but if you look here, I don't want the zone here 2 points off the low, right? That's going to get me just past what was the last, for lack of a better term, well-auctioned area. You really can't call it that, which was right in this little area right here, right? If we slip past, it would be very easy to take me right to the back of this zone. So I am specifically targeting this 1874 and 3/4 to 1875 for my entry to the long side if we get down in here. If I don't get hit, I'm fine missing it. It's quite possible that I will miss it, right? Simply because the ranges have been narrower. My entire objective during a very there's two ways to set up your trading strategy, okay? You can say, I've got to make money every day and I'm going to capture everything and I'm super trader and I can easily adjust my entries and exits as I enter and as I switch from day to day. I'm not super trader. I'm actually quite the opposite. I have a harder time and I trade so leveraged that I don't like getting caught flat-footed when the volatility switches. So instead of what I consider taking the bait of coming in and trying to capture everything in a lower volatility market, I take the other perspective, which is I'll be better prepared when the volatility expands and I won't get caught with my pants down, even if it means that I miss a few trades when the bands are narrower. It doesn't bother me, right? If worse comes to worse, I've got Netflix. So at any rate, that's how I look at it. I need to pull this back. Therefore, this zone is narrower. The white zone is narrower. It takes 15 minutes. And then the other part of that is, right, what is the point of bringing it up an extra point, right? Don't I actually increase my chances of a stop? Well, yes or no. Yes and no. If after 15 minutes the volatility is less, we should be getting less expansion to come out and tag us out. If it does tag me out, right, let's say through the course of the month that I move that stop 3 or 4 times, right, over a course of anywhere from 15 to 30 trades that'll take place over the month. Well, that saves me, in effect, just chopping 1 point off that stop with using that time limit, in effect saves me from 2 additional stops points-wise that I might have to otherwise calculate in. So that's why I adjust in that manner. Now, I do give the option, and I want to clarify this. I say you can either close the trade out, break even, you can move the stop up, you can leave it where it is, right, or you can scale half and go to a net break even. All of those are fine options. The only place that causes you a problem is if you haven't already decided before the market opens which one you're going to execute, because that causes you to think. When you think, you ask questions. When you ask questions, that opens your mind up to uncertainty. Why? Because questions have to have options, and options are always uncertain. Okay? Know what you're going to do. Your brain will reward you by taking action, right? And if you look at that action over a period of time based on your data you're collecting on your own trading, you'll know what the correct answer is. For me, the correct answer is bringing that stop to within a point of whatever the swing low is and crossing my fingers and hoping it works. I already know from looking at my spreadsheet on a daily basis, right? If I have doubts, I do this. Anytime I have a doubt in the course of the day as to whether what I'm doing is the right thing or the wrong thing, this is exactly what I do. I pull this up, and my own internal data sheets go back years. Okay, I pull this up and I go, oh look, this is working for me consistently day in, day out. If I have one day where it doesn't work or I take a stop, I don't care, right? It works great, and you'll notice the majority of these stops, this was a -3, this is a -2. Usually they're not 4 full point stops, okay? So I think it's a really big part of my edge, and I want to emphasize that. It really makes a difference to me being able to stay on track, okay? So that being said, on top, let's talk about where I will take trades. Okay, I will take a trade first time into yesterday's low. Okay, this if we come in from underneath, I'm actually more apt to take the long in the white zone if we can get stretched up and not test it early on. Right now we're at 80. Right now we're at this. Why am I off on this? 1885. That's correct. I see, because I've crunched it up too much. I truly hate the drawing tools that they give me on this. Hold on 1 second here. Okay, here we go. Okay, so right now we are trading 1885. Puts us right into right where we closed yesterday, right? So first time into the white zone, this needs to work relatively quickly, and if 85 is the most we get, it needs to work fast, right? There's not a lot here to help us. This is just, there's a tiny bit of structure. This is the bottom part of structure here, and it's already was tested yesterday, right? This is the backside test. So it's possible that we come in and just test. Okay, so the other area that we could come and test is this 1876 on the backside, and there's no clean way to set this up. We didn't spend much time at either one of them. The only thing that would have me concerned here is this, so it needs to get out of here quickly. Okay, otherwise we could look for a backside test. The reason why there's no zone here on this 1876 3/4 is because I assume if we're going to come back for this backside test, we'll come back and we'll give us a shot at the low of the day, which is where I'd rather take my long if we're going to get it, right? So 85, 86 gets us to 80. As long as we can get 86, 87, I'll take the trade the first time. If by the time we get to the open it's only a 2 or 3 point rotation, I'm going to have to call this as I see it and not be automatic, okay? So this is automatic, first time in, 2 point stop behind, right? All of this, okay, so you should take a imaginary pen from here all the way down to here where this open gap is, okay? All of this is technically incredibly poorly auctioned, okay? Which is why, again, we need 15 minutes to get the heck out of here or forget about it, right? Also, watch for consolidation right above these areas, right? If we consolidate like this and then move in, not interested here. Again, I'll call that as I see it, okay? 1871, again, right in the middle, poorly auctioned. The first place I will absolutely take a trade after this, after Wednesday's low, is this 1868.50 to 1865.50. Realize that the range has been 10 and 15, where we've been starting to find, at 15 points, we've been starting to find attempts at reversals, okay? That puts us right in the middle of this traded location. What I will need to take a trade here is tick divergence. This is location, but it's just the trade action was terrible. So I want to make sure that I'm being clear on that and not confusing. It's possible that we find responsive buyers here. It would require that I see a 1 minute tick divergence. And again, 15 minutes. Why? Poorly auctioned. This is the first place I'll take a trade, and I'll let the trade work in this location. And by the way, I'll take this trade right at the top of this zone with a 2 point stop behind. Okay, everything else, this needs tick divergence. I'll take the trade here with or without tick divergence. White zone depends on the rotation. I'll call it as we get closer to the open. Okay, so let me erase that and then go to the upside. Okay. Okay, important to note on your chart. See this 1878.50 area right below here? Right below the white zone? This has been a battleground, okay? It has been chop city consistently. We chop through here, we chop through here, we chop through here. There's a reason there's not anything here. This is a serious chop zone and an awful location. There is structure there, but it's an awful location to initiate a trade until we work this out. What usually happens when we get into areas like this is they move through these areas very easily. Okay, we either chop or we zip through, but either way it ends up being a lose-lose. You have to have extreme patience or you get smoked really quickly right in this area. I absolutely hate it, and we'll go to a larger chart in just a moment. Okay, up above we are opening 85 3/4, so that would put us into Wednesday's high, which would put us right here, which means we're too close for me to simply take a trade off of Wednesday's high. How do I default on that if I want to take a trade there? My only option left is a trap trade for those of y'all that I've gone with, that I've worked through this. In this particular case, I'll lay this trade out. The way that it would work is that we would trade above, come back down, and close back below, okay? And then the idea would be that we'd move to the other end of the range. I'll do my best to call it if I see it. There's not enough range. There's not enough range or rotation. Give me just 1 sec, guys. I'm going to clear my throat, take off my headphones. Okay. There's not going to be enough rotation based on where we're opening right here. And additionally, within the first 15 minutes, right, we have econ coming up right around the corner. It's going to make this area very hard to trade in right off the open. Okay, so the other thing, if you're not very fast and agile, or you can't handle taking a stop in a slow market, right? Remember, if you get stopped one time, you may only get one other trade opportunity for the day. Okay, so consider that. You may want to wait till 9 a.m. to start your trading day today, because you're going to have econ data 12 minutes and between 12 and 15 minutes in. half the world will get it at 12 minutes in, the rest of us will get it at 15. And then we're going to have another piece of econ that actually could weigh on the market one way or the other afterwards. Okay, so simply waiting until 9 o'clock. This 1890.53, this leaves me with two choices in this location. I can move, let me go look at the price action here real quick because I really want to adjust that zone. Okay. How do I want to adjust that? Globex high, 1890.50. I have initial resistance right above that. See what's happening here is, okay, so normally, see where these 10s are? We would get this overnight, like a stretch. Look at the range overnight. It's 1883 to 1890.50. Normally, a 10 stretch, either way, up or down, wouldn't be a big deal, right? But because our range is getting more and more compressed, right? Look at it from what we've had on these days, right, to what we're getting right now, these tiny little ranges. That's why this is getting harder, is because everything is starting to get crushed on top of itself, which is why I'm having to reduce the size of the zones, right, because of lack of rotation. So the way I think I want to treat Globex high is still going to be the same. I think I'm going to treat it as this, I'm going to leave initial resistance alone, okay, and if you take the short here, I would either look for tick divergence into Globex high, right, and you have one or two ways of handling this. Technically, you can treat this all as one zone, okay, one very big zone, 90 to 94.50, right, and it's because it's sloppy up here, okay. We're very poorly auctioned right up to this point, right here, right in front of Globex high. Okay, so I have two choices. I can turn this 1890.50. Okay, so what I could do is make this as, so I'm going to try to show you some of my thinking that goes through what I can do and what I'm not going to do. Okay, so I could turn this into a zone like this. Okay, I could put 88.50. Or let's call it 88 3/4. 88.50 would be a bit much, but that's fine. I can make this a zone, but then look what we end up having, right? We have 86.50 followed by 88.50 followed by 92.50, which means if we're trading, right, we can enter, we could technically enter here, get stopped here, enter again here, get stopped here, right, and then get stopped again. You can essentially end with 3 stops back to back. So how does that force my hand? Okay, well, it forces my hand in that I need to make a decision as to how I'd rather trade and take risk, right? And this splits me, particularly publicly, right? Internally, when I have a desire to internally I have a desire A, to be right, and B, I want to make money while I'm trading. But then I have to have a default, right? What am I going to default back to as a trader? Well, what I'm going to default back to is I know the majority of the time we don't stay in these compressed ranges, and if I'm going to make a mistake, right, or if I'm going to make an error, I want the error to be that I waited too long for the market to come to me and I missed a trade versus I got too aggressive and came in too narrow and took a stop on a day when I know my opportunities are reduced. So this is how I resolve it. We're leaving Globex high alone. Basically, that means plus 1 or 2 ticks is where you want to look to enter, and you need quick rejection. I would prefer to have tick divergence here, right? And I would not be surprised to see them try to push through here, right, and up into initial resistance. So the way I'm going to treat that, now that I've thought it through, the way I'm going to treat that is I basically am going to have to, what I'm going to do is adjust just a drop here. I'm going to bring this zone down a tick to 1892 1/4 to 1894 1/4. Okay, with my reasoning being that even if it pushes to the back of the zone, my 2-point stop behind will still keep me in the trade. Okay, so I want to bring this zone right here. 92.25 to 94.25. Okay. And if we get pushed up behind here, right, this is very poorly auctioned behind. I'm going to let him make a run into the year-to-date high. I would expect rejection the first time in there. I'll want tick divergence, and I would not expect him to make this easy. Okay. Secondly, the quality of the rotations, and I tried to show this live yesterday when I traded with y'all in real time, is that I want to see rotations in NQ and ES before I get aggressive taking counter trades, okay? And I'm going to show you exactly what I was talking about here, okay? And I did it in real time. You can simply look at it, okay? Okay, if we look right here, look at this. There's no rotation, guys. This is 1880 to 1879. All of this, this is 1882 to 1880. You had to, in order to get 2 points out of this, you had to nail it perfectly, both on the bid and the ask, okay? Not interested. What actually set this up was eventually a trap, okay? Also notice that we didn't get the improved rotations until after 9:30 a.m., okay? What did it look like on the day before? We came down. We really didn't get a good move until after 9:30 a.m., okay? And even then, we had 2 moves that were decent, and then we stopped counter-rotating for the most part. The reason for this is because the VIX is sitting right down on near its all-time lows. I think the last time I was speaking to a friend of mine who's a fund manager, 2002 and 2007 were the last times we saw VIX this low. Okay, what that means is don't be over eager to trade. We will bust, and I want to show you all that right now. Okay, on the zones above, let me finish my thought process before I go all ADD on y'all, and then so y'all can finish your trade planning. Okay, I'll take a trade first time into initial resistance. This is location I'm willing to lose money. If it doesn't, just be aware, if it doesn't reject right out of the front of the zone, okay, I'm not taking the middle. I'm either taking the very front or the very back, one of the two, because in the middle there's not a lot, okay? So I either want it to reject right off the front, which is where I'll probably take the trade, or I want it to reject right off the back. I do not want to trade at this level in the middle of the zone. I want to be clear. At year-to-date high, I'm not taking a short into it. What I'd rather see is it trade above and then close back below on a 5-minute. I'll use whatever that swing is as a stop. Okay, above here. These are all calculations based on my head and what we've been extending out to, right? If we get up to 1904, that's 20 up, right? And then if you get all the way back up here in 1915, that's 30 up. Highly doubtful that we get up 30 today, right? We're probably going to find resistance somewhere in this area. Also realize what we've been doing is once we get these initial moves, right, we've been sitting in these tight ranges every day past 10 a.m. for the most part. Not every day, but almost every day, right? We've been getting this crap. Don't get caught up in trying to trade this stuff. If the market doesn't give us a clean shot, you don't have to take it. Obviously, NQ will present us with an opportunity. Also, in your chart, okay, mark this trend line out. Very easy. There is no down until we break this trend line. Okay, should have it nice and thick. We need, obviously that would require us to get below Globex lows. That trend line held beautiful yesterday. It doesn't mean anything if we do break it. Understand, we can come below and then step right back above it, okay? But just mentally, right, you should be able to look at that chart and go, oh, we need below the downtrend to start having a downtrend. The other thing is look on the volume profile and realize where we are. We're trading right at this 1886.50, the 1878 that I pointed out down here. Okay, when we get into Wednesday's low, see how we held this 78.50 here, this area right in this location? This 78.50 is a war zone, okay? If we get underneath here into Wednesday's low and we get a 2-point rotation, notice A will be below that white zone. I generally, for a strong market, I want the white zone to hold, okay, to the upside. I will be exiting aggressively on my scales here, and if I leave a trailer, it'll be small, like 25, either a quarter or a fifth of the position to the upside is all I'll leave after that initial 2 points. I want out most of it under 2. Why? Because And go back over here. And again, I don't expect anything dramatic to happen. The market will tell me when it moves. I'll call it. If I see ranges expanding all of a sudden, I'll call it out. Okay. We've been going over this for a couple of days. 18. All these closes took place right here at 1878.50, opens and closes. Okay. This has become a war ground. We were unable to close above. We have finally closed above. It would not shock me to see us have a pattern like this now that we've gotten above. Right? We've broken out, backside test, come up and make a move. What will that look like on our chart? Okay. And again, this is conjecture because we're getting so little rotation, right? That translates into into that white zone, right? That's why I want to see it come in, find responsive buyers, and push back up. If we get below that, right, it'll put us back in to the broader trading range and opens us up at least to taking a trip to this bottom point, right? And if we get extended all the way down to this 1840 level is a possibility as well. Now that I've covered all that, I want to show something very specific here. Okay, so everyone doesn't get frustrated and we can all keep our heads about us. When it gets harder. We'll just do it on a 30-minute chart, easy enough. Okay, first of all, you can see 30-minute chart, we have started going sideways. This kills most swing traders, right? And it kills guys who chase momentum. You chase in this thing, okay, you're going to have your butt kicked. It's quite clear. Here's the bigger range. I mean, if you really want the answer, that's the breakout, that's the breakdown. Until then, expect sellers above and expect buyers below, okay? And there's not a lot to try to rack your brain over figuring out. And all this in between, right, that 1860 to 1880 level is the hardest area to initiate on either side. That's the brief synopsis there, right? If we go back a little bit to this is my friend Alan will know why I'm laughing here, but some people were concerned. We got this for a solid 2 weeks, okay? Notice the range over 2 weeks was 1810 to 1835, a 25-point range. Some days we had 6 points. I mean, look at this stuff in here. This is like super tiny ranges, okay? If you got used, what happened in here, because I talked to plenty of traders, right? Traders got used to jacking this thing because we saw balance all day long. They were jacking it multiple times in the zone. They were taking a point here, point there, point here, point there. And then we gapped out of range. And all of a sudden, everyone who was taking a point here, point there, were taking 3-point losses here, 1-point loss here. They were buying dips and getting straight up run over, okay? This is a process of building energy for a move, okay? See that right there? Now, you've got that. And I can show you other examples, but that was the one that was freshest in my mind. Come over here. Here's the range. 1860, it's a little bit better. 1860 to 1895, it's 35 points, right? But look, some of these days are starting to get really tight and really non-rotational, right? Don't freak out, okay? This stuff will come back. We'll get an explosion out of the range. It'll usually be accompanied by a gap, okay? There's no need to force your hand in this environment. Take what the market gives. Pay attention to your 25-minute timers. Don't get complacent. Volatility will expand. New information will come into the market. We'll make money. That's how the deal works. Okay, the deals don't get chopped in the meantime. Let's look at NQ really quick. Okay, the first thing I see in NQ, taking a look tightly, right? We're not in a downtrend. Everyone talks about how TF is falling apart. Okay, I see an uptrend personally. Okay, from here to here, and roughly here to here. It's not scientific, but it's close. I see most days when I take a quick glance at this, that on most days, we're getting drives early in the morning, one way or the other, okay? Most of these drives, for the most part, have been up, actually, not down. There's been a few down ones, but they've been pretty strong drives, especially in the first half hour, right? That's been the hardest area, if you get it wrong, to screw up, okay? But again, the range is getting narrower. If we draw this in just a little bit, right? This was the range before that we've been dealing with all the way till April. Nice big fat ranges, right? Now we're going back to smaller tiny ranges. When were these ranges? Again, look in December. If you got frustrated when we're getting these little tiny things, right, you set yourself up to get smoked. Even if it took 2 weeks, so what? Look, the range expands again. Guys, we get narrow, we get wide. This threw a lot of people off right here, right? But nothing lasts in this market. Everyone thought, oh, this is just going to keep going on forever. Traders are getting frustrated. It goes away. This will go away as well. Clearly, just looking at just doing quick technical analysis on this, right? You want levels? Here you go. This level right there to right here, that structure, that 652 to 3666, is the first major area of resistance that we have. We've gotten over this lip at this point. We have a little structure right here. There's an open gap sitting there. Okay. Beyond that, we've got this. Next comes this little area right here with specifically targeting 3708, and then you have these few areas right above. Below, we have structure sitting right here. What is that? 3569, right? And then below that, that famous 3542, and then there's 3480 is way down here, which seems like we were just there a couple days ago, but that's where it is, okay? The next thing I want to look at really fast, right, to get a picture. It's 8:29. I'm going to go into the open. We have econ anyways in 15 minutes, so screw it. There's no point in worrying about it. Okay, so the next thing I want to know when I'm looking at this, okay, what do I want to know every day? Let's do this. Format. Let's just get this down to the nitty-gritty. Okay. From the high to the low. No modified, right? This was the 50% retrace. What bears want to see us is get below this 3607 in order to have any move or impact to the downside, right? So the next thing I want to know, if we do get below that level, right? Obviously, if we hold above, it's not uncommon to stretch beyond that 62% retrace and still fail, FYI. Okay. Next, what do I want to know? Well, what's the other side of that coin? Well, if I take it from here to here, right now, I know that approximately this area, that 3521 followed by 3494, familiar areas again, right? That's approximately 50% back from the swing low that we had down in this location. Okay, cool. Now I have two locations. I'm not so worried about this anymore. I know this is the top of the channel, and I know that it would be perfectly natural because of my knowledge of the market, and it does it in all markets, for us to come back into this area. Does it have to? Nope. But it would be natural for it to occur, right? So again, not overly concerned that about the tight range right now. I'm quite certain that there'll be a payout, right? Every time, also notice when we get to highs, everyone else is looking at this right here. Where is my, I gotta get rid of this tool. Okay. Okay, there's the larger trend line. This is the more aggressive trend line down right here. Okay, you see that it respected it. We're back above it. So the first thing I know that we need to happen in order to get bearish is we need to get back below this upper trend line. It is highly common to fall out of channels and then regain them. This is a good example right here. Okay. Everyone looked. Oh, we fell out of the channel right here. See how here, let me draw it so everyone can see it. Right here. there was a channel, there's another one going up along the top of this, right? So you can see this area right here. Everyone thought, oh, it's all going to zero, right? We fall out, we regain the channel. We fall out again, we regain the channel again, and go back up. Markets have memories, even if it takes temporary trips outside of the channel. I'm more inclined to believe that it'll recoup that channel. Secondly, remember, when we're at the top of a channel or the market looks extremely strong, with the exception of this period right here, okay, where we just ripped like crazy, okay, that it is normal to get to the top of a channel, look like we're going to get super bullish and break out, and then what do? We fall right back to the bottom of the channel. When we get to the bottom of the channel, they make it look scary. Sometimes they even break the bottom, and then they snap it back up. This is what I talk about when I reference, for lack of a better term, psychological warfare. Okay? If you'll go back and look at these dates, when we were in here, okay, look in these areas. Look in these areas on the upside, right? These looked incredibly convincing on the way. These looked incredibly convincing when they were on top that we were going to break higher, and it looked incredibly convincing that we were going to zero at the bottom. Right now, the drive up on NQ and ES has been pretty relentless. It looks convincing emotionally when I look at that to go, I don't want to short here. It looks like we're going to go to the old high, right? Or we're going to set a new high, okay? And they've set everything up so beautifully. We're above that 1878.50. Could we still keep grinding? Absolutely, right? But what I don't want to do is drink the Kool-Aid and go, we're absolutely going high, and lose my mindset of balance, okay, and attacking the market. Most markets look like this, okay, not like this. This is why I didn't freak out when we kept going up. I just want to sidestep this crap. This is not my strong suit. Most people look at this and they go, this is your opportunity to make millions and millions of dollars. I disagree. I think all this is your opportunity to make millions and millions, and I think all of this is your opportunity to make millions and millions. I think this is an opportunity to get your ass kicked. Okay? Why? The market goes directional. You stand in front of it. It forces you to do one or two things. It forces you to drop being a counter trader and chase, or only trade in a momentum fashion in NQ, and also going back to ES, right? And the problem with that is that the history, if you go through and circle the periods where we got this, with the exception of 1999 and 1998, which was a beautiful thing, okay, with the exception of this, okay, this and this is the norm, okay? So get used to buying when it's down and selling when it's up. You'll make a whole lot more money. I hope that made sense so far. Okay, Micah, thank you. I'll slow down just a second to catch up. I think everyone got the point on this, on what I'm looking at. So understand that we could pull all the way back. I want to make this clear as I erase this here. I don't know why we're going so slow, but okay. So let me get rid of half these drawings, because as you can tell, I'm not interested in screwing with this until after we get through the first round of data at least. Right? And also, what's the reason why I'm not interested in getting involved in this first round of data, right? We've already proved that we've been choppy as hell, right? If we had days where we've been having AM sessions where we've had 10-point rotations in the morning, hell yeah, I would trade this. I could rip 2 or 3 points out of the market before that econ comes out, either on trap trades or what have you. But we haven't been doing that. We've been getting non-rotational AM markets. I can wait till the market proves to me that we're back to getting good, fast whips back and forth, and I can come in and out quickly and get my risk on and off, right? Otherwise, why do I want to park myself in a position where I'm going to have to make a decision 1 minute before econ comes out as to whether I want to get in or out, raise my anxiety levels, and be all nervous? I'm not interested in it. Okay, so let's get rid of this. Excuse me, not this, this. Okay, so answer is bigger picture, pulling back at this point right into this area would be totally normal, would not mean we're in a bear case, okay? Doesn't mean we're in a bull case either, right? And that we are just behind the 62% retrace, right? And that really this area right here, right up to here, that we actually have room right up into that 36.55, 36.68 area on NQ, and that's kind of how I'm looking at that. Let's see if there's anything else to look at really quick. Oh, let's go to volume profile real quick. Get rid of that. Okay, volume profile, obviously on a 24-hour is what I would rather look at here real fast. So we know that we need to get below 78.50 for any significant bear move to happen to the downside. Okay. And this chart will come up anytime reasonably soon. Calculating analysis techniques. Boy, it's taking a long time. Okay. We're obviously very nicely balanced. The first area that we need to get below is this little lip right here, this 1880.82. I think we have that marked off on the chart. Well, I have it a little bit above, so hopefully we push back into the white zone. Like I said, it could come at 80. I'm going to be a little more conservative with that today, right? And you can see we just came back and backside tested Globex low. Here's all we did, and we found responsive buyers off of it, which makes sense. We have econ in just a moment. Okay. On the upside, right? Look where we're getting contained, right? Because again, there's no range. But if we get above this 1891, really 1892 level right here, which again translates that into this area, right? So why do I have it back here? Because I want to see, my normal instinct is to let it get stretched, right? I could have made the zone 1890.92, but the problem is if you have your 2-point stop right there, you get tagged out. So we're going to need a little help from the market to make our entries work today, or we won't have entries, one of the two, right? But if we can get tagged up into this area, it gives that little bit of stretch, that little bit of extra exuberance, and then a push back down, okay? But if we can get above that 90.92, there ain't jack holding us. We have these little lips right here, but there ain't jack holding us from new highs, okay? Keep that in mind. It's outer space above here. Okay, all you have is exhaustion and patterns. If we get up into this area and we do so before the first hour, use the first hour high will also become the next area to use as a determination as to whether we're getting responsive sellers or not. So I wish I had something more exciting this morning. I just don't. I'll be looking for the traps on NQ and ES. I did not check my NQ chart to make sure I had the Globex highs and lows correct. I have 36.31 and a quarter and 36.45 as the highs. I know we haven't been up there yet, so I know the high is correct. Let me see if the low is correct. So that is correct. I have 36.44 and 3/4. Is that correct? It's like I'm going to have to adjust that just slightly. Oh, no, I got 45, excuse me, 36.45. And then on the low side, obviously we haven't tested that either. And we do have 36.31 and a tick. So we haven't touched Globex high, we haven't touched Globex low. We're sitting right in the middle. Obviously, we chopped around here all night, right? So we'll want to look to the edges for our first opportunity. Oh, and then I want to do one other thing while I have y'all here, right? And that is look for structure. Notice how poor the structure was yesterday, right? Let's see here. Okay, so from yesterday on NQ, let's bust this to a 5-minute chart. Okay, so the first thing I want in terms of determining weakness or no weakness, so those are the 2 points, right? Obviously I need this one first broken, followed by this, and then there's a third piece right here that we can work off of like this. So one of those three will end up being the trend line that it respects. Obviously, bottom line, if we need to get below this point to really have any kind of substantial down day, right? Next, where's the structure and what's been tested and untested? Okay, well, that's a little bit easier here since we didn't spend a lot of time right there. Okay, so let's see, we had structure here. Structure here, we broke out, we retested, we backside tested, we came back up. So let's say this was structure, tested, this was structure, tested, broke out. We have not retested this area right here on NQ. It's a very tiny structure, but it's there. So looks something like that. Then we have this again. So we haven't really backside tested into this area. We're really poorly auctioned under here. Okay, and all of this was, I would say, relatively speaking, after we came out with the Fed, everything below this lip right here, poorly auctioned, right? So if we get below this 36.31, let's see, below this 36.31 3/4, what's the Globex low? Okay, well that makes sense. They did that last night, okay? So we've backside tested into that area. The market's so logical sometimes. Okay, so we backside tested into this. We haven't done it yet in the day, right? I would want to see a quick rejection and or a trap at this location for a pushback higher. There is no structure above really. This was it. Okay, we've already top side tested. We haven't bottom side tested during the RTH, but I imagine that we will, right? So in order to have any downside, we got to get below that 36.31 1/4, which is Globex low, right? Below that we have a little lip here, but it's nothing. This was all poorly auctioned all the way through here, right? And if we get underneath here, it was actually all the way poorly auctioned right down to 36.1693. Okay, and then obviously whatever the econ was just came out, and they're trying to push us to Globex highs. We don't have anything there. Again, we have that econ at the top of the hour. We might get short squeezed or pushed or whatever into that. But I mean, look at the range, guys. Like, what's our RTH right now? And this is a whole shocking. We're trying to get 5 points right now, which I guess is okay. It's better than nothing, but it's nothing to get overly excited about, right? Okay, so those are the structures. Really, the bigger structures are back here. Okay, open gap. Sitting right here, guys. Okay, have that marked off. I would expect responsive buyers first time into this location. Okay, just keep in mind, if we don't get a quick response out of here, this whole thing ended up being structure from here to here. Okay, and if we don't get a quick response out of here, look for a backside test of that 35.84. Also look at the stretches, right, from high to low. What are we doing today on the NQ? NQM 14. Okay, so the low is 36.33. We add 15 to that. That brings up 48. 5 above. That puts us just above. That would be a 15-point stretch. That puts us just above Globex high. Look for a potential trap there. Also, obviously, they haven't broken us to the downside, so I don't know that you necessarily want to step in front of the econ data, right? If we get a stretch of 30, where does that put us? 48, 58, 61. That puts us up here. Is that right? If we get a stretch from the low of 30 points, 33, 63. Okay. So 63 puts us right here. Okay, so what do I want to do? Well, I want to find what the hell's up there to see what's going to help me, if anything, right? Aha. Okay, so I see that there's two things when I get up here. First of all, I would expect a response somewhere between here and here, okay, when we get up here. And if we get up here, either right at 63, okay, and behind 63, this little area right here. Which one of these will stick? I have no idea. I could get 5 points or 10 points off of each of those locations, okay, but at least I know that in this particular area right here, right, looking back, okay, this is where we're at right now, okay, look to the left. What do I know I don't want to do? I have this little lip right here, okay, that we have clearly busted, right? We rejected out of that. We've busted right through. What I know is I don't want to step in front of NQ until 36.52.50 at the earliest, okay? Maybe it would be 36.57 before I step in, right? Or, right, and by the way, we went right to Globex. You'll notice we went right to Globex and rejected out of that, right? That was the only other area that we needed to pop in there, and we're rotating right now, but it's not a trap yet. We have not traded above Globex high, and we still have 12 minutes till econ. So I guess what I'm trying to say in all this is if you'll slow it down, and I know I've been going on forever and I apologize, but might as well educate because hell, there's nothing else going on. Look, we didn't get a test of Globex low. There was no entry there. We did get gap fill, right? And that's fine, but there was no significant rotation. There was no significant rotation down to jump in. You had econ standing right in front. If you'll just go through this period of time, it's been slow the entire time the last couple of weeks, right? We'll get our setups when they come to us, and your spreadsheet, okay, when we're all said and done, should start looking like this, right? And then there's one other column that I didn't point out. As y'all know, I don't hype or call, you know, this is not a you'll become a millionaire overnight service, right? But look at the potential points that were available on trailers on almost all these trades. Almost every one of these trades offered more than, there was only one trade that you literally had 2 points to get out of. Everything else, 7.5, 4.75. If you go add all this up and you were somehow magically maximize all of these trades, right, this comes up to closer to almost 55 points in 2 weeks. Okay, so getting to the point where you can leave trailers matters. Okay, and that's all I want to stress on this particular issue is that once you can get the trailers, life becomes easier. But you've got to do the math work behind it. Obviously, the guys who've been working with me on coaching, you know that we can go in and look at MAE and MFE, and we can get a good idea of what our trailers are worth, right? And just adding 1 or 2 points to your trailers can increase your P&L 25 to 30%, right, through the course of a month. So especially in a slow month like this, it makes a big difference. So if anyone has any questions, you're welcome to join. I've got nothing else to add. 31.25. Yeah, you are correct, Micah. It is 31.25. So anyways, we're at 46. I'll be interested to watch how NQ gets handled. And this, as you can see again, we got right to this pointed location, right? Another reason why these are working so well, and I don't have to work as hard to figure out these pinpoints, is there's no momentum to this. Okay, like we're up 10 in NQ. It's not exactly exciting, right? So we're getting these little rotations. Also keep in mind, if you get the rotations, right, and it stalls at 2 or 3 points for my NQ traders, scale, because it ain't going 20 points right now. You know, scale, get some off, move your stop back, and if you fall into a couple good trades, that's great. Same thing with ES. If you're in there for 25 minutes and you only have 1.5 instead of 2, take it until the volatility expands, but don't do what everyone else does, which is get comfortable with the 1.5 and forget about the rules. A, you'll forget that there's 5 or 6 points available on your trailers. B, you'll get run over if you get too comfortable trading the ranges too narrowly, right? If this continued for 2 months, we'd have to make an adjustment, but I doubt that it will. So anyways, everyone have a great day. I hope this was helpful. And I'm going to go and pour a cup of coffee and wait 8 minutes to get the econ and see if I can find a little bit of money to pay for lunch today. So anyways, we'll talk later. Have a great day, guys.